Now, we've talked a lot recently about digital transformation, traditional business models moving online. Well, that's certainly been the case in recent years when it comes to investing. More people than ever are using online platforms and apps to invest in shares and in funds. And there are more options than ever. One area that's seen particularly rapid growth is ethical or purpose investing. Well, I can speak now to the founders of two such apps. Live to Tom McGillicuddy. He's the co-founder of Ticker, which is an ethical investing service that's just launched a junior ISA. And I'm also joined by Seth Ward. He is the founder of Pynk, or is it Pynk? I'll find out in a moment. A fintech helping people learn and earn through social investing. Gentlemen, welcome to you both. Tom, let me start with you. What sort of uptick have you seen in trading during the pandemic?
Thanks for having me on in. Yeah, we've seen a really good response during the pandemic. In fact, we, like a lot of businesses, we feared the worst in March, but we've had consecutively some of our best months that we've ever had, and monthly revenue has gone up 3 times since the beginning of the lockdown, basically. So we've seen, in tandem with that, our average customer investing more per month. So now the average customer invests about £180 per month, which has kind of doubled during that time. And as a consequence, assets under management on the platform have been growing 20-30% month over month during the pandemic. So it's been a great kind of test case for us as a business, and a great test case for impact investing as well.
And which have been the sectors most sought after? I presume tech.
Tech, yes, but obviously we're an impact investment app, so we have multiple themes. One of the most popular is climate, and that isn't going anywhere. And we've seen a kind of broad-based uptick across all the themes. One of the most popular themes on the platform is to combine technology, equality, and climate change. That continues to be the most popular. So we've kind of seen it across the board.
Well, Seth, let me bring you in. It is Pynk, isn't it, not punks? I've seen some of your followers on social media calling themselves punks.
Yeah, it's definitely Pynk. You've got the clue in my clothing here.
Indeed. So your business is based around collective investments more than the individual.
That's right. Yes, we've put together and are still building a system where we can actually incorporate the views of our investors into the decision-making process, and that's inspired by an age-old concept called the wisdom of crowds, which allows you to predict the future. In our case, what's going to happen to investments and assets more accurately than if you only listen to a small group of people, no matter how expert those people are.
Well, you talk about the wisdom of crowds, Seth. I mean, there's another investing concept called the madness of crowds, and we've probably seen a bit of that in stocks like Tesla in recent months.
Absolutely, absolutely. You know, there is a problem in any area where kind of large amounts of humans are working together that can create and result in herd mentality, and that's absolutely something that our system is built to avoid. And you know, we've certainly seen some crazy prices in the markets recently, perhaps encouraged by government actions and free money and all the time that people have on their hands. Yeah, that's not how our system works. We're trying to find the pockets of insight within the collective community.
Well, Tom, a lot of the people who trade on your platform, they're quite young. They've probably only come into market trading in many cases during the last few months. Do sell-offs last night help remind them that stocks can go down as well as up?
Yeah, I think so. I mean, our customer base is 90% of them have never invested before, so they're brand new to this. So the things that we kind of espouse, the kind of investment behaviors that we want to instill from the way we've built the platform is to invest regularly, invest monthly, kind of take timing the market and the emotional side of that out of it completely by setting an investment amount around payday, use tools to invest like roundups so you can save an extra £10 a week. And doing that can kind of help balance out the fluctuations in the market. And what we tell people is we are an investment app for 3, 4, 5, 10 years, if possible. So the short term doesn't matter as much because you're investing for the long term. And as the data kind of backs up, you can see that over the long term, investing that way consistently, averaging in all the time, stacks up as a good investment strategy.
Seth, I imagine that's a message you're entirely in tune with.
Absolutely, we're on the same page there. You know, we're seeing people thinking that they can make crazy amounts of money in the short term, and you know, everything that's happened in the markets since March would kind of underline that belief. But actually, there's a huge danger of of making losses when you get to a position of having too much confidence and putting too much money into a small number of assets, thinking that things are going to go the same way. So very much in line with that belief. It's all about long-term investing. Absolutely.
All right, Seth Ward, Tom McGillicuddy, good to talk to you both. Thank you.